All right, so question 21. All the following requirements generally are covered by building codes except. So here we're obviously talking about building codes, which is a form of police power. And hopefully you remember what police power is. Remember, police power is authority granted by the state, could be granted to an individual, to an office, or to an association, basically to anybody. And with that authority, they now have the legal means to take any action they deem necessary in order to enforce whatever rules or laws or regulations or whatever they've been put in charge of. They can take whatever action necessary to enforce those laws. And remember, there were several different types of police power, okay? Well, one of those examples was building codes. Because obviously, if you're going to build a building, does it have to be built to code? Yeah, obviously that's to make sure we're safe and hopefully no one will get hurt inside the building that you put together if it is built to code. So obviously 3 of these options here fall under building code requirements. 1 does not. So let's take a look. A, fire prevention standards. Absolutely, that's part of the building codes. Electrical wiring, part of the building codes. Sanitary equipment, part of building codes. So obviously that kind of narrows down what the answer is going to be, but D says a minimum number of square feet of land there are per apartment unit. Yeah, building codes does not determine how many square feet of land you have to build on. Now there may be other forms of police power, like restrictions, covenant restrictions, stuff like that, that may have some requirement for a minimum number of square feet to build on. But that's not part of the building codes. So the answer here would be D. Not part of building codes. Okay. 22. Which of the following best describes a buffer zone? All right, so first of all, what's a buffer zone? Remember, a buffer zone is a area of land, piece of land, that sits between 2 conflicting different types of zoning properties. For example, you got a commercial zone property and then a residential zone property, if I can get the screen here. Anytime you have 2 conflicting zone types that are adjacent to one another, there has to be something that separates those 2 zones. Again, it can be pretty much anything. Could be a wall, could be a ditch, could be just a strip of land. A lot of times I think like 25 feet, minimum 25 feet. You'll see that used a lot as a buffer zone. But look, here's the key. That buffer zone cannot be used for construction or building and conducting business on. It's just a piece of land that really you're very limited on what you can do with it. It's just there to separate the 2 different zoning parcels, right? So let's see, first of all, which of the following best describes a buffer zone? And by the way, anytime you read a question and you notice, like, you see the word best and it's in all capital letters, a lot of times they'll do that. Which of the following best describes a buffer zone? What that kind of tells me, the right answer is not going to be here. So what you might think in your mind is the right answer is not there. Because they're not asking for the right answer, they're asking which one of these would be the best, right? So keep that in mind as we're going through here and for other questions you may see on the exam. A, an industrial park located between a shopping center and a residential neighborhood. No, remember we said you can't build an industrial park because you can't really, there's not much at all you can do with this buffer zone. B, a high-rise apartment complex located between a commercial development and a townhouse subdivision. No, you can't build an apartment complex in a buffer zone. C, a recreational area located between a residential area and an office park. Now that might be a potential there, because when we talk about a recreational area, like a park bench or something like that. So you're not really building on it. And again, remember, we're looking for the best answer, the best of the options we have here. So C could be a possibility, but let's look at D. A sound barrier located alongside a major highway. No, that's got nothing to do with a buffer zone. Not if you know what a buffer zone is. Remember, a sound barrier is usually when you have like a residential neighborhood that's right up against a major highway, interstate, or something like that. They'll put up these tall walls right between the interstate and the houses to try to buffer some of the sound that might come from the street. Well, that's got nothing to do with a buffer zone. So D is not right. So obviously the best answer would be C, a recreational area. In fact, another term that they like to use on the state exam, they might replace recreation area with a small park, which is really about the same as a recreational area. So just little things like that you can do with it. Most buffer zones, quite frankly, tend to be just a piece of vacant land, like a 25-foot strip that you can do very little to nothing with, quite frankly. But that's what a buffer zone is. All right. Number 23, police power public controls include all the following except. Now, we were just talking about police power and what that is, so hopefully I don't have to go through that again. But I will point out, because this is important to pay attention to in this question, remember there's a number of different examples of police power, most of which were considered public controls. But then there was 2 or 3 other examples that were considered private controls. Y'all hopefully remember this from your text. Well, the difference is this. Public controls are controls that are put on us by the government or by the state, if you will. But the government puts certain requirements on us on what you can and can't do. Those are considered public controls. Private controls are when we put restrictions and requirements on ourselves, from person to person, if you will. The government's not involved with it. So you got to make sure you keep that in mind. And it specifically says in the question, public controls include all the following except. So 3 of these are controls put there by the government. 1 is not. And we're looking for the one that is not. But A says city plan specifications. Well, as soon as it says city plans, that tells me government. So that would be a public control. Building codes. Yep, the government decides what those building codes are. So that would be a public control. Zoning or zoning laws. Again, that's a public control. Deed restrictions. Obviously, this has to be the right answer because there's only one left, and it is the right answer. Deed restrictions. Remember, a deed is just the document the seller signs to convey property to the buyer. It's a conveyancing document to convey real property from one person to another. Well, could someone that is selling or maybe giving their property away, could they put certain restrictions on there saying, look, I'll give you this property as long as you don't do this and this or whatever. Yeah, that means they have put restrictions and they put that in the deed. Well, restrictions that are in a deed are put there by the person that's selling or giving the property, not the government. So that's an example of a private control. Okay, so D would be the right answer. All right, 24. Which of the following provides for monetary compensation to an owner in the event that the owner's property is taken to build a new freeway? Now, hopefully you know the answer to this, and I would hope that most of you were thinking right away that's eminent domain. That's what eminent domain is. Remember, eminent domain is the right the state has, or the government has, to take private property as long as it's used for public benefit and just compensation is paid to the person that the state's taking the property from, which is exactly what they're saying here. It says they provide monetary compensation to the owner in the event that the owner's property is taken to build a new freeway. Obviously, they're taking it to build a freeway which would benefit the public. So that's eminent domain. But then if you look at your options here, eminent domain is not an option. What's going on with that? Well, there's another term here that also means eminent domain, and that term is condemnation. Condemnation is technically, this is the legal procedure the state exercises to take private property via eminent domain. Look, I put this here and I worded it this way because this is another thing they like to do on the state exam. A lot of people would read this question or something similar to it and think that's eminent domain and go look, and that's not even an option. Now we start freaking out. Y'all, they like to use condemnation instead of putting the term eminent domain. Now, if eminent domain is there, I'd go with that. But another term for it is condemnation. I'd just remember that. Condemnation is eminent domain. So hopefully that wasn't too hard. So the answer would be condemnation. All right, number 25. A potential homeowner should have a certified inspector check around toilets, showers, sinks, and basement walls to detect what kind of problem. Now, if you think about it, the areas they mentioned, toilets, showers, sinks, these are areas that tend to have water or moisture around them, right? So what kind of issue could you find in areas with water or moisture in the area? And that's what we're looking for here. Let's see. A, radon, which is a gas, radon gas. That's not going to be limited to one of these areas. This could be absolutely anywhere if it exists. So that's probably not the right answer. Carpenter ants. Probably not. If you have carpenter ants, they're probably in the kitchen where you got crumbs or food or something like that. So no, that's not the right answer. Methane gas, yeah, again, it's just another gas, but a gas is not going to be limited to one area. It's going to kind of, if you have it, it would be all over the place. But D is mold. That sounds like the right answer to me. Obviously, anywhere you've got moisture or certainly standing water for any amount of time, there is the potential of mold. So, yeah, the right answer would be mold. Obviously, that was pretty easy right there, I hope. All right. Then number 26, which of the following statements does not correctly describe the authority of a homeowners association, the HOA? Remember, HOAs, that's part of your private control. That's a form of police power, right? Does the HOA have the authority to enforce the covenants and restrictions of the neighborhood? Absolutely. Remember, and that's police power, which means they can take any action they deem necessary to enforce those covenants and restrictions. So just to clarify that, and then again, it's asking which of these statements does not correctly describe the authority of the HOA. Well, let's see. Paragraph A, when a homeowner buys a home in a PUD, she must agree to the CC&Rs, that stands for Covenant Conditions and Restrictions, which run with the land. That's an accurate statement. You buy a house subject to covenants and restrictions, then you're going to have to comply with whatever those restrictions are. B, all homeowners must follow the association restrictions. Yep. Just talked about that. So that's an accurate statement. The HOA has the power to levy assessments. In other words, levy assessments against all the homeowners got to create income. Can the HOA do that? Yes, they can. look, maybe you're paying your HOA dues, however much they are, whenever they're due, and you've been doing that right on and on. But is it possible that something unforeseen happens that has to be fixed or repaired or replaced, something there in the neighborhood, and there's just not enough money in their account, in the bank account, to make that repair or replacement or whatever the case may be? In situations like that, then the HOA will send a bill, if you will, a levy, the homeowner requesting additional, not requesting, it's not a request, it's not an option. They're saying, we need this much more money from each homeowner in order to pay for whatever needs to be done. Can the HOA do that? Absolutely they can. So that kind of narrows our options down here to, it must be D. But what does D say? The HOA does not have the power to impose fines. Well, we know that's an inaccurate statement because they do have the power to impose fines. Now look, here's what you have got to be. I hate these questions, but you got to be careful with stuff like this on the exam. They like them on the exam. But this is what we would refer to as a double negative. Because they're in the question, they're asking for statements that does not correctly describe, and the answer or the right answers indicate something the HOA does not do. That's a double negative, and it can be very confusing. It really kind of flips things on you here, so you got to be careful. Does the HOA have the power to impose fines? Yes. If you're not complying with the covenants and restrictions, they can fine you, among other things, but they can certainly fine you. So when it says the HOA does not have the power to impose fines, that is an inaccurate statement. So that would be the answer they're going to be looking for. D. Y'all, again, this double negative. I hate these kind of questions and answers, but you might as well get used to it because they're going to do this to you on the exam. So be careful. Read well. All right, 27. The characteristics required for a property to have a value include all the following except. So what they're asking here are, what are the essential elements of value? Remember, there were certain elements or characteristics that make up the value of the property. Remember, there's four essential elements or characteristics of value. And if you remember back from your text, we even give you an acronym to help you remember what those four are, called DUST. And DUST stands for demand, utility, scarcity, and transferability. So three of those are there: demand, scarcity, and transferability. Those are part of DUST and meet the characteristics of value. But the answer to this question obviously is depreciation. Depreciation is not a characteristic of value. I have people want to argue with me all the time. Well, if a house depreciates, that's going to depreciate the value. That's not what we're referring to here to start with, number one. But number two, and probably the biggest thing you need to remember, they're asking you, they're trying to make sure you know what are the four essential elements or characteristics of value. Depreciation is not one of them, period. So you can debate and argue about, does depreciation affect value? That's not what they're asking here. I know nobody, this is a video right now, so obviously nobody can argue with me about it, but in the classroom people want to argue. And I keep coming back to, do you know the four characteristics of value? Yeah. Well, is depreciation one of those four? No. So there, we're going to leave it there and move on. So obviously you need to memorize what those four elements of value are. Okay, depreciation is not one of them. Excuse me. All right, look like we've got a little math problem here. So let's take a look. It says you own land worth $40,000 and your building has a replacement cost of $160,000. What would be the value if the appraiser used a depreciation rate of 30%? Okay, well, let's make sure we understand this question. in the question, they have broke out the value of the land and the value of, let's just say it's a house. In the question, it says a building, but let's just assume it's a house. But they're saying the land is worth $40,000, but they're saying the house or the replacement cost, meaning if we had to rebuild this house new today, it would cost $160,000 to build it. Well, just because it would cost that to build it today, does that mean that's what the value of the house, because we're not actually building a house, right? The house we're appraising might be 30, 40, 50 years old. Now, if we did build another one exactly like it, brand new, it'd be $160,000. But this house is not worth $160,000 because it's not brand new, right? It's been here 30, 40, 50 years, whatever. It's got wear and tear, got some damage, got some repairs that need to be made, things like that. So we have to depreciate from that cost new, from that $160,000 cost new. And in the question, it says the appraisers decided to depreciate by 30%. That's the depreciation rate. So the first thing we have to do, you take the $160,000, you see where you sit on the slide here, $160,000 times 30%, which will give you $48,000. That means, so we're going to depreciate $48,000 from what it would be if it were a new house, $160,000, right? So if we take the $160,000 minus the $48,000 for depreciation, that gives us a value of $112,000. So this house, in its condition, depreciated, would be $112,000. But to complete the valuation, remember now we have to add back what the value of the land was. Remember we said the land was worth $40,000. So if you add the $40,000 on top of the $112,000, then that gives you an appraised value of $152,000. Now, one of the important things to remember here is this. Now you notice again in the question, they separated the land value from the building value. The reason you have to do that is because, you need to remember this, you can never depreciate land for any reason. You cannot depreciate land. So I have to know what's the value of just the building, because I will depreciate from the building. I cannot depreciate from the land. So you'll notice the total, if $160,000 plus $40,000 would be $200,000, assuming the house was new. Well, you can't depreciate from the $200,000 because then that would include the land. And that's a no-no. You cannot depreciate land. So that's why I got to separate it out. Now, the reason I'm telling you this is because you might see a question where they don't separate it out. For example, they might tell you the replacement cost of the improvement and the house is $200,000. The improvement and the land is $200,000. The land is valued at 20% of that $200,000. So that means you would have to calculate. You got to figure what's 20% of $200,000 if that's what it gives you. And I think that'd be about $40,000 if I'm not mistaken. Don't have my calculator, but I think it's about $40,000. So you might have to separate the land value out yourself. And then obviously whatever's left is the value of the house. Hopefully that makes sense. So you got to make sure you know the value of the improvement or the building all by itself, and that's the only thing you can depreciate. Remember that. Never, ever depreciate land. Alrighty. And then 29, which of the following does not apply to the definition of market value? Y'all, I'm going to tell you, even when we're actually in the live classroom with students, a lot of people get this wrong. So let's take a look and see what the issues are here. So the question is, which of the following does not apply to the definition of market value? So first of all, you need to know what the definition of market value is. I'm not going to go over that right now, but if you need to, you can go back in your book and see what the definition is. But which one of these four options would not be part of that definition? Well, A says both the buyer and seller must be well informed. That is in the definition. The definition said both buyer and seller must be acting prudently and knowledgeably, well informed, knowing what they're doing. B, market value is the average price that a property will bring. I'm going to tell you right now, that's the answer. That's the right answer for this question. But that is not an accurate statement, which is why it's not part of the definition. And the reason is because you know the term average. You cannot average anything when it comes to value or appraisals. Average is a no-no. I will tell you, a lot of real estate agents do stuff like this, where they'll go find, say, 3 or 4 houses that have recently sold, and they'll take those sales prices, add them up, divide it by 3 or 4, and get the average. What was the average sales price between these houses? And they'll try to use that to determine the value of the house they're trying to sell. Y'all, that is wrong. Chances are you're going to be way off doing that. That's a no-no. Do not ever average anything. Y'all, please remember that. You cannot average or use the average of anything when it comes to valuation and or appraisal. That's a no-no. But let's look at the other two. C says both the buyer and seller must act with undue process, or sometimes they might say undue influence. In other words, they can't be under pressure or being pushed into doing something they would rather not do. Can't do that. And then D says payment must be made in cash or its equivalent. Well, I think cash is pretty simple. We know what that means, but what do we mean by its equivalent? Well, for example, a loan. Could the buyer want to buy the house but have to go get a loan from the bank to buy it? Yeah, well, that's considered an equivalent, because when they borrow the money from the bank's going to give that money to the seller. So in essence, the seller's still getting the cash they want. So that's what they're really talking about there. All right, so B would be the right answer, because we know we cannot average anything dealing with valuation or appraisal. Okay. And then number 30, another math question here. The annual net income for an office building is $20,000. If the owner realized a 9% return on her investment, the value of the building would be. So what they're talking about here, when they say the owner realized a 9% return, they're talking about capitalization. That 9% is the capitalization rate. Okay. This should be, if you remember what I'm getting ready to tell you, any kind of math question dealing with capitalization is very, very easy. Don't let them make it hard. The first thing I have to know about the property is what is the annual net income for that property, the NOI. Annual net income. Y'all, this is annual. They may give you a question where they say the monthly net income is this amount. Well, then you're going to have to take that amount times 12. Y'all, you have to know the annual income. Now, in this question, they made it very simple. They just told you the annual net income is $20,000. But once I know the net income, all you will do every time is divide it by something. That's it. That's all you're going to do. Take your annual net income and divide it by something. Okay, well, what is the something? What do we divide by? Well, there's only two things you can divide by. You either have to divide it by the capitalization rate or the value of the property. and they have to give you one or the other in the question. And obviously, whichever one they don't give you, it will be what they're asking you to solve for. So in this question, they actually gave you the cap rate, the capitalization rate, and they're asking you what is the value of the property. So again, very easy. All you got to do is take the $20,000 divided by, in this case, 9%, and that gives you $222,222. Pretty simple. Can't make it any more clear, plainer than that. But they could have given you a value. They might have said the value of the property is $222,222. What is the cap rate? Well, then again, take the net income, in this case $20,000, divided by the value, $222,222. A lot of twos there. That will give you a 9% capitalization rate. So again, if you can just remember, the first thing I got to know is what's the annual net income. And then what am I going to do with it? Divide it by something, either the cap rate or the value. Again, they got to give you one or the other in the question. That's all there is to it. Okay.